Hello everyone, welcome another video review from elliottanalysis.com. In this video, I'll be running through the technical analysis on SGX, which is listed on the Singapore Exchange. Here we have the weekly chart for SGX, and the price actually touched slightly above $10 and came down in a rapid fashion here. This whole move down can be considered as a wedge pattern, and there are a few characteristics of wedge. First of all, upon the completion of the wedge, there will be a strong breakout. So we got that strong breakout, but then prices retraced back down, but never went below the start or the end of the wedge pattern. Secondly, normally wedge pattern retraces a large part of the whole move, but so far this retracement has only gone as far as slightly above the 38% Fibonacci level. Thirdly, wedge patterns denote start of a change of trend. The previous trend was in the upside, and this wedge appears at this trend reversal phase, and this means that the trend has changed to the downside, and this is supported by this sideways or rather choppy movement to the upside here, which is a bear flag. And once this is over, we are likely to see the prices head down and continue on this trend which has been initiated by this wedge pattern. Now, taking a look at this bear flag, we have this trend line here. Here you can see that it was tested 4 times, 1, 2, 3, 4, and the price is actually coming down to approach this trend line again. And the second thing is that this trend line, we make a parallel copy here to form this wedge, and as you can see, the price was never able to launch itself to touch the upper end. So there's some weakness on this price movement. There are a few points of reversal that we have seen before. Here we have a strong reversal. This is a second area of reversal, and this is the third area of reversal to the downside. So each of the bullish move to the upside was turned down this region, which is sitting nicely between 730 and 770 level. The bulls did make a strong break to the upside by breaking this level, but so we see here it was with some volume, although it was not as big as this region here. So there was some volume, so the bulls made an attempt to recapture this region, this zone of resistance, and they managed to do that, and the price came down and to retest this region. Now this is a bullish move. Normally price should launch itself, and but the bears, the bulls were obviously exhausted. The selling was too heavy, and the bears managed to push down the price instead. Now this whole move has resulted in a sideways move. Here we have a contracting triangle which has formed, and the contracting triangle normally has 5 legs, and here we have 1, 2, 3, 4, 5 already. And once the price hit this level, you can see here there was another strong reversal to the downside. So it's looking it's looking quite weak, and for the bulls, the bear seems to be in control here, but we need to see what happens when the price reaches this trend line. If the trend line breaks this trend line to the downside, we could see the price continuing on its downwards move, which was initiated by this wedge, and the price could first of all take out this low and might go even much lower than that. But if the bulls manage to break to the upside, okay, and by taking a measured move of the widest part of the triangle, we arrive at around 8.6 860 region. Now this region is also the 62% retracement of this wedge, so there is a possibility that this might also happen. Now let's take a look at the weekly, the daily chart to see where the bulls and the bears stand in this contracting triangle. So here we have the trend line, the bottom trend line here, and here we have the top trend line, which is of the contracting triangle. So this is where the bulls broke through the resistance region, came back down to test it, and they tried to launch the price, but the launch was actually short-lived, and the bears sold down quite heavily here. Now the other point to note is that within this subwave we have the first wave, one second wave, third, fourth and fifth. So the contracting triangle is likely over, and price has now headed lower. And not only that, it headed down in a dramatic fashion here. There was a big gap down, and so the price is actually headed down to this region here, where it's going to touch the trend line. Now it all depends on what happens here. If the bulls manage to hold this trend line and launch the price higher, we could see it heading to 860 region. But if it should break, then we are going to see a very low price for SGX in the coming months. Now the work for the bulls is quite difficult, because first of all they have to support this line, and then they have to launch the price, and they have to close this gap, and then they have to go above this trend line to the upside. So it's quite difficult for the bulls. This setup favors the bears, but if the bulls should launch an attack and manage to overcome all these obstacles, then it's likely to hit much higher to 860 region. So we'll be looking out for what happens when the price approaches 720 region, and yeah, till then, goodbye for now.